Welcome to this week's ASX strategy session. A little bit of a different location behind me, as you'll see this week. I'm coming to you from central Vietnam. I'm in a little town called Hanoi, about halfway up the coast from Ho Chi Minh or the old Saigon. Bit bright in the background. You probably can't take it all in, but there's a rice paddy behind me. The local workers are there, so it's a very nice location. But I wanted to get in touch. Lots of things going on in the market, so a quick check-in, a little bit shorter than usual. Nonetheless, we'll go through the markets and see what's going on. As always, though, everything general commentary only, no personal advice in any of this. Having been through all of that, let's get into this week's first chart. So, starting off with the ASX 200. And well, it's been a quiet week of it's largely been a quiet week of consolidation. Not a great deal of movement at all. I think the positives from this is that when we look from the November low, the rallies have been strong and the pullbacks have been shallow. And then again from the mid-December low, another strong rally and then another shallow consolidation. And prices are, well, when we look at this, prices are possibly stepping higher. So you can kind of, how can I just sketch this out? Well, you can see, they strong rally sideways. You can see this sort of like stepping motion they have in play, and you get that when you get a series of rising highs and rising lows, as has been developing in the ASX 200. And the consolidation has largely been, the most recent consolidation has largely been above the moving averages, which are starting to turn higher again. I think the key now is for a break above the December high. We don't have any near-term momentum at the moment. It really has been that sideways movement, but a break above that mid to late December high, I think that would spark some of that momentum, and I think what we have here suggests that it's really still about maintaining that bullish bias. Nothing here is suggesting that this is a market that's about to turn notably lower. It's the bullish structure remains intact. Having a look at the equal weight, so the ASX 200 on an equal weight basis, and you can really see, I think even more so than in the ASX 200, you can see this series of rising lows and rising highs that has been playing out since the late November low. And just this week we've had today on Friday. So I'm filming this at around 2 p.m. local time, which is around 6 p.m. in Sydney on Friday. And you can see on Friday the ASX 200 equal weight has hit a new 2-month high before pulling back during the day. This continues to trade above the moving averages. You can see the 1500-day moving averages. Price has generally been above there. Brief excursion below them in November, but generally they've been holding around these moving averages quite well. And so I think this is overall constructive price action. Timing is always tricky with the consolidation. So we've had this big rally from the April low, and the last 2.5 months to 3 months now, almost nearly the last 3 months has been about consolidation. So the timing of an end of a consolidation is always tricky. They can always drag on longer than you think, and sometimes they can end quicker than you think as well. I don't think we could rule out a retest of the moving averages, also a retest possibly of the November low. I'm not saying that that's necessarily going to happen, but just being open to different ways as this could play out. For instance, say the market were to pull back towards the moving averages over the next few weeks, it could then stabilise, bit of sideways, and then from there start to move higher. So this may not play out whatsoever, but it's just to put a different scenario on the table, other than, well, the market just needs to go straight up now. It may not do that. It may take its time and just make things trickier and drag things out for longer. So be open to the possibility of a pullback towards these averages, or maybe a bit lower, before maybe a rally into maybe late January, early February. All sorts of ways this could play out. But I think the underlying structure here, I think it remains bullish. And I think it's about remaining exposed to the upside, being exposed to the upward trend, and continuing to hold stocks which are trending higher. But as always, using those trailing stops to exit positions which start to go too far against you. I think that's probably the play. Coming over to the US market, so starting with the S&P 500. Well, this week we've seen the first new all-time highs for the year, just in the last couple of days. Tuesday, Wednesday, we've had some all-time highs in the S&P 500. Structure remains bullish, rising moving averages. Nothing's changed there, and price is above the moving averages. So that's the definition of an upward trend. Prices have largely been trading sideways for the last couple of months since late October. But as I say, this upward trend does remain intact. I think the trend's even clearer when we look at the Dow Jones. So just looking at the Dow Jones Industrial Average, and you can really clearly see here the series of rising lows and rising highs over the last few months. So the Dow's really outperforming the S&P 500. The S&P has been somewhat weighed down by some of those big tech stocks, which have been lagging, basically been lagging the market. But the Dow's giving a good indication of what I think is happening broadly in the market. To show you what I mean with the Nasdaq just coming across, you can see the Nasdaq hasn't made a new high since late October. It remains in this coiling pattern. You can just I won't connect it all up properly, but roughly like that. You can see this coiling pattern that the Nasdaq has been in. So it's yet to confirm the highs that we're seeing in the Dow and the S&P 500, with it being below its previous all-time high. So it's yet to confirm the highs we're seeing elsewhere, and that can sometimes be a warning sign that the market's struggling when you don't have all the components rising together. You have something which is faltering. That can be a warning of some underlying weakness. But I think the big story here in the US market, I think the big story has been about the participation, about the increasing participation in the rally, and so this isn't a narrow rally. It's not a rally led by just a handful of stocks. Show you what I mean. S&P 500 equal weight. That's just made a new all-time high this week with a strong rally off the 50-day moving average, and it's also had a strong close on Thursday. You can see it's closed out Thursday up near its highs. That's strong. It's a strong price action. I think the equal weight is so important to look at because it's not led by Nvidia or Microsoft or Apple or any of those big cap stocks. It's got to have that broad participation from across those large 500 companies for it to be making new highs, and that's what it's doing. It's got that participation. Uh, Also, higher highs, higher lows, and prices above rising moving averages. So that's all, again, it's textbook bullishness. I don't think this is a market that we should be looking for tops in. Rather, we should continue to be staying with what's working, and that's been the play since just after these April lows. Just one more measure of participation, which is worth looking at. This is the percentage of Russell 3000 stocks. So this is a really broad measure of the US market. Percentage of Russell 3000 stocks above their 100-day moving average, and you can see there's just been a surge in this indicator just over the last few days. It's now up at 61%. So 61% of Russell 3000 stocks are now above their 100-day moving average, and that's up from just around 50% a few days ago. So again, that's encouraging. I think it's positive for the broader market that there's that greater participation coming in. I think the play here remains long stocks. Other than that lagging of the tech sector that we're seeing, I think the overall structure, I think it remains positive, and I think the broad participation remains a key factor in what's happening within this market. So yeah, I think staying with the trend, staying with that trend until we have clear evidence to the contrary. Now, if you're getting some value from this, please click that like button, leave a short comment, tell me what you think. Are these markets going to make new highs into later January, into February, or is there a top forming? Like, what do you think? What do you think happens here? It's always interesting to get your thoughts. But yeah, please click that like button if you're getting some value. Now, I'm going to move on to the small caps next, the US, the local small caps, the commodities. But of course, that wraps up the free section. If you're not a strategy session member, there's a link below. Click it. Come on in. Doesn't cost you very much. I think you get a whole lot more interesting stuff by coming on in. All right. So over to gold.